Okay, so today's topic, we are going to be talking about the key to big trading profits. Again, my name is Derrick Oldensmith. I have been trading professionally with T3 specifically since 2010. I run T3's Manhattan trading office at our headquarter office, where I currently manage, well in excess of 50 professional traders for the firm. Okay, so the key to big profits in the market, it really comes down to this one term. It's the term risk skew. So what does that mean? Risk skew basically means knowing when to size up, based on the trade that you're involved in. So trading comes down to risk, reward, and probability of success. And I don't care if you are a high-frequency trading robot who is making decisions faster than the human eye can blink, or if you are a longer-term value investor like Warren Buffett. Trading comes down to risk, reward, and probability of success. That is the formula of trading. Very simply put, if you can risk one to make one and be right 60% of the time, you're going to be very wealthy in the long run. With that said, most of the best traders that I've ever met are actually wrong more often than they're right, but their risk reward makes up for it. So if you are correct only, let's say, 35% of the time, but every time you put a trade on that works out for you, you make 5 times your risk or more, those numbers are still going to really work out in your favor in the long run. So again, risk, reward, and probability of success. The risk reward part of that formula is simple math, right? You take account into your what I refer to as sense risk, which is the difference between your entry point and where your stop loss is going to be located, and your share size, and then you can come up with how much you're risking. So for example, if I purchased the stock at $50, my stop loss is at $49.90, I have 10 cents worth of risk. Every 1,000 shares I take would be $100 worth of risk, and that is excluding the possibility of slippage. Slippage is kind of the X factor in the risk reward equation, just because, so basically slippage is getting a price that's worser than you meant to get. So if you had that stop loss at $49.90, you might get a couple cents slippage because there's not enough liquidity at $49.90 to absorb your selling. So that can add on to your risk. I have some formulas for that as well. Just very generally, I think that whatever the spread of a stock is, double the spread and don't be surprised if you get that much slippage. That's kind of a very general rule that I use. Probability is a little bit more dynamic when it comes to the market. Again, whereas risk reward is simple math, probability, there's so many factors, so many individual things which can affect probability at any point in time. Some of the main ones that could affect almost any trade that you get involved in are the market itself. Was there news in this equity this morning? Do I have volume confirmation on the trade that I'm taking in? Do I have time frame continuity? Is every picture telling me the same thing regardless of time frame that I'm looking at? Understanding relative strength and relative weakness. Different times of day can give you a higher or lower probability of success. I've always found that the best time of the day to trade is really the first half hour. But 10 to 11 a.m. Eastern is still pretty good. 2 to 4 Eastern is pretty good as well. Middle of the day can sometimes be a little bit tricky. It's why I like to do these webinars in the middle of the day. And another layer of probability could be if there's any larger time frame chart patterns. So basically, when you're trading, you are trying to identify, well, do I have a strong risk reward on this trade? And how many of these layers of probability are on the side of my trade, right? And then you put that all together, and that can give you basically a better or a worse trade. And risk skew, which again, I really think is the key to learning to make big money in the market. Risk skew is the concept of risking significantly more in better trades and risking less in trades that aren't quite as good. So risking more in trades where you have that better risk reward and you have more of these layers of probability actually on the side of your trade. So one of the things that I really like to do is grade my trades. This is something that I really suggest to all new traders who are coming in, and it's a valuable exercise for experienced traders as well. So you learn to grade your trades based on risk reward and probability of success. So you can build out a grading system that is similar to what you may have gotten back when you were in school. So you can have a letter grade for different types of trades. So for example, an A+ trade is a trade that has an excellent risk reward and an overwhelming probability of success. So you've got every single one of those layers of probability that we talked about on your side. So here you're looking at this trade. Maybe it's right off the open. That's a great time of the day. And you can get in initially right now for small risk, but you can look for a much bigger reward. One of the things that I like to do is I like to find intraday risk that's based on a 5 or 15 minute chart, but where my trade is in the direction of the larger time frame, the daily chart and the weekly chart. That puts me in the position from a risk reward perspective to have intraday risk for daily chart reward. So that can give me an excellent risk reward. And this trade, in addition to having a great risk reward, has every possible layer of probability on its side. So I'm looking to go long and it's right off the open. The market is trending in my favor. I'm expecting the market to go in my direction today. So in this case, up, because I'm going long on the trade. I have time frame continuity. There was news in this stock this morning. The stock is relatively strong compared to its sector, and its sector is relatively strong compared to the market, etc. So that is an example of an A+ trade, which has this excellent risk reward and overwhelming probability of success. So that's going to be a better trade than maybe a C-type trade. Maybe a C-type trade is just kind of this, regular run-of-the-mill trade, which is still worth taking. You think that you will make money in the long run if you took this trade consistently, if you took it over 100 times. But maybe it's nothing to get too excited about. You still have a good enough risk reward, but you don't have necessarily every layer of probability on your side of the trade. Maybe you've got several things against you, several things that are neutral, and nothing really, against you. So several things with you, nothing really neutral, and maybe not so much anything against you. You still think that you can make money over time. So basically, you would want to risk significantly more in that A+ trade than in that C trade. And you need to come up with numbers for yourself. So build a system. Trading is all about rules, right? So you can create a rules-based approach for game planning based on a letter grade system. So this A+ trade, that means, and again, obviously the numbers are going to be individual to each person, but maybe an A+ trade is the trade where you risk $1,000 in, and then you build a scale for yourself all the way down to that C trade, where maybe that C trade is something that you only risk $150 in or $200 in. So you want to create rules for yourself around this, and recognizing an A+ trade in real time, sizing up and taking advantage of it, again, in my opinion, is the way to make really big money potentially in the market. So as I was saying, you have to have a rules-based approach for anything that you do. You should have a rules-based approach for your risk management rules, your money management rules. You should have rules for your game planning and rules for potentially implementing risk skew based on this letter grade system that you could build for yourself. Pretty straightforward. Consistent profitability requires a trader to develop a set of rules, because that's the only way that you can apply yourself into the marketplace consistently over time. And learning to be able to build this risk skew rules-based graded system, and then learning to be able to recognize it. This is a whole nother step, by the way. Learning to be able to recognize in real time that this is an A+ trade versus this being like a B or a C trade. I remember myself when I was a new trader, when I was first getting started in the business, a decade plus ago, I wasn't good enough to be able to tell the difference between an A+ trade and a B trade in real time. I was only able to really see it after the fact. And that's why doing your extra work after the market is closed is so important, like keeping journals, keeping statistics, re-reviewing all of your trades on a daily basis. That's where a lot of progress can be made for a professional trader. So for myself, I was really only being able to see it in hindsight. I took this trade today, now I'm reviewing my trades. Wow, that was an A-plus trade. If I really could have sized up, everything was on my favor, I could have made a ton of money in this trade. And you know what? It's okay to see things in hindsight at first. Because by doing that work and learning to see things in hindsight, eventually you're going to be able to kind of do it in real time and be able to implement it in real time as those trades actually set up. So I actually think for a new trader, so when not to implement risk skew, if you are brand new to the business, even though I think risk skew is the key to making big money in trading, I don't think you should implement it when you're brand new. When you're brand new, I actually encourage, first maybe 3 to 6 months of a trader's career to enter trades with uniform risk across the board. Because you're still very early on in the learning process, right? It's like if you were just learning to play basketball for the first time, you can't get out there and start playing with Michael Jordan. You gotta learn to dribble, then you gotta learn to shoot. Then you can start playing some pickup games, some 2-on-2, some 1-on-1. And then as you get better and better, you can start playing, with better opponents. I think it's similar here. When you're brand new to trading, I don't think that you're going to be good enough to recognize the difference, and this is from my own personal experience, between an A-plus trade and a C trade in the beginning. So start by just having uniform risk. I'm going to risk $100 in every single trade that I take as an example, because then you're building experience, like you're getting out on the basketball court and dribbling. And then somewhere 3 to 6 months into your career, if you are putting the work in and you're doing that after hours journaling, you're going to start to be able to see the difference between these really good A-plus setups that could make you a ton of money and these other trades that are worth being involved in and these other trades that you shouldn't be involved in at all. Sometimes, take a quick half step back. The definition of a trade is something that has a technical reason and a technical out. That's my definition of a trade. And when I find a trade that has a technical reason and a technical out, the second question is it a good trade? Because sometimes it doesn't have a great risk reward or that great probability of success. That would be a letter grade D or F, which means I don't want to take it at all. When you're brand new, if you're just learning the business, you don't want to implement risk skew yet, it's just a very simple equation. I'm either in the trade or I'm not in the trade. If I am in the trade, this is how much I'm risking. And then as you get better, you can start to implement that risk skew, and that's when you can potentially start seeing larger profits in the market. Capital access in professional proprietary trading is extremely beneficial in these scenarios for the professional trader because it can allow you to take advantage of those A-plus trades when they come along. I should make note, A-plus trades, it's not something that you're going to see every day. I wanted so bad this morning to be able to have an example of an A-plus trade setup based on this morning's trading to be able to share with everyone taking the webinar today. And you know what? I couldn't find one. They're not always there. A-plus trade setups might only happen a couple times in a month. But if you recognize it and you load the boat on the risk and you really implement that risk skew properly and that trade works out for you, that could be the trade that makes your entire month. I personally have found that as far as trading profitability goes, it's really like a few days in any given month that really make or break a month, right? It's the few days in a month where the entire month you've been great with your money management rules, you were really disciplined, and then you just had a few trading sessions where things really worked out for you, that you got everything came together and you had a big upside day. It's those few days in the month that will make your entire month. And the opposite is true also. It's those few days where you failed to have discipline in your risk management and you let yourself lose way more than you should have that can ruin an entire month, right? So having extra capital access, like what our professional proprietary traders are able to get, which is significantly more capital than what you can get in like a retail account, can really let you take advantage of these A-plus trades because I don't have to worry about how much a stock costs. I just have to worry about the risk. So here's my opportunity. Maybe it's a more expensive stock, Apple, Facebook, whatever, and I need to be able to load the boat on this risk. I don't have to be sitting there with like a calculator figuring out, well, how much of my portfolio is in cash that I can implement into this trade. I'm just piling in the capital into the trade, and I'm focused on the risk. So that's a pretty big difference, I think, between a retail, trading account and a professional proprietary trading account. By the way, I am currently hiring professional proprietary traders for T3 Trading Group. So if anyone is interested, I know that there's a chat functionality here in the YouTube forum. I think that my email address is also going to pop up here a little bit later, so you can feel free to reach out to me directly or provide us your contact information, and a member of my team or myself directly will reach out to you to discuss the onboarding process for trading professionally. But there's definitely a lot of advantages to that additional access to capital that you're able to get. I was actually mentioning this a little bit earlier, focus on risk reward, risk reward and probability of success, right? So when it comes to risk reward, what I'm trying to do with my trades, I generally, even if I'm specifically day trading, I'm always trying to trade in the direction of the bigger picture. What's the bigger picture telling me? And then I'm going to put my risk on and let the trade play out. You will get stopped out of trades. Even A-plus trades, because we're always working in probability. So an A-plus trade is this trade that has an overwhelming probability of success. It's not a 100% probability of success. There is no such thing as a 100% probability of success. Just as you put that trade on to the long side, everything looks like it's perfect, maybe instantly news comes out. Your trade fails. It is okay to get stopped out. It's even okay to get shaken out of trades. What is a shakeout? A shakeout is basically, and if you trade long enough, I promise this will happen to you. It's happened to me countless times over the course of my trading career. A shakeout is basically you put your risk on, you put your stop loss in, the trade triggers your stop loss, that basically becomes the bottom. So you lose, this actually happened to me today in a position. I got shaken out of one position that I had in the SOXS, which is a 3 times levered bear ETF for the semiconductor space, and I got shaken out at basically the absolute bottom, and then the trade started to work out without me. It's okay. I've seen, especially newer traders, get really, really upset when that happens. But the biggest mistake that you can do is let one shakeout start to change your entire trading system. Because it's never about one trade. And there's a probability always of getting shaken out and having that trade work. It's about, what does this look like if I took this trade 100 times, if I took this trade 1,000 times? Do the numbers still work out in my favor? Because there will be a percentage of time where the trade works fantastic, a percentage of the time where the trade fails, and a percentage of the time where the trade even shakes you out. It's better to get shaken out of a trade. You can then reassess your rules to make sure that your rules are appropriate, but provided that your rules are appropriate, you just want to stay to the course. So keeping a position overnight. So we're talking about, again, trying to find that intraday risk for bigger picture reward. Like everything else in trading, you should make rules for yourself. So for myself, not with all of my swing trades, but with a lot of my swing trades, the way that I like to trade, I have rules. So one of my rules, as an example, I will generally only keep a position overnight if I'm at least 1% in the money on an intraday basis. Why do I have that rule? Well, because anything can happen overnight. Markets gap, right? And if I held a position that was against me intraday, and that stock gaps down against me even further, I'm putting myself into a bad position. But let's say at the end of the day I closed 1% in the money on this position, and now the market gaps down 1.5% tomorrow morning. Okay, well, I'm losing money in this trade, but basically I'm primarily just giving back profit that I've already made, right? So it's a much better scenario to be in than if it was already against you and now it gaps down and you're just in a really bad spot. So you need to create rules for yourself for overnight positions for swing trades. So a lot of my swing trades, they start as day trades. It closes, well on an intraday basis. I have this profit cushion. I love what the bigger picture chart looks like, the daily picture, and I believe that I can get even further follow through on this trade tomorrow. That then could be a trade that I potentially keep overnight. And then again, next thing you know, it could be that you started a trade with that 10 cents intraday risk on a 5 or 15 minute chart, and next thing you know, you're making multiple points because it became a swing trade and it continues to work with you. And then you're getting that overwhelming risk reward. And that's really, at the end of the day, what I want. I want overwhelming risk reward and as best of a probability of success as possible. So why T3 Trading Group? So T3, just so people are aware, has both retail trading accounts and professional proprietary trading accounts available. The retail account is, just a standard retail account like you might find anywhere else, except we have some advantages. Our main edge on the retail side is direct market access. So all of the other all of the other retail trading companies, the main online brokers, TD, E-Trade, Robinhood, etc. They sell your orders out to HFTs. We don't do that on our retail side. You have direct market access on professional trading software, and you would still get free access to me and to my VTF room as well. But historically, T3 has been a proprietary trading company, and we're one of the largest in the United States. We have several physical offices, including our headquarters, which is in Manhattan, which is where I am typically trading out of, as long as we're not in the middle of a global pandemic. At this point, though, even before the virus hit, a majority of our traders were actually remote traders, so it's no problem at all. It actually made it really easy for us when the virus hit and everybody had to leave the offices, because we already had the infrastructure in place for all of our traders to be remote. So it was very seamless to getting everybody out of the office and getting everybody to start trading remotely. We have, on the professional side, 4 different front-end trading software platforms that a trader could choose from: Lightspeed, Fusion, Sterling, and Wex. Personally, the one that I use and recommend is Lightspeed. Lightspeed's a great software. It is not options capable. That's the only downside of it. Generally, our options traders use Sterling Trader Pro. We also do have futures trading available as well. It's a different group. I'm not as directly involved with futures trading with the firm, but if anyone has interest specifically in futures, you can still reach out to me and I'll put you in touch with the right person. And we're regulated. So we are an SEC broker-dealer and member of FINRA SIPC, which does mean that all of our traders have to be licensed. I see that a person had asked a question here about how difficult is the certification to become a prop trader. So there's 2 exams that you have to pass. The first is the SIE, Security Industry Essentials examination, and the second is the Series 57, which is the Professional Proprietary Traders examination. T3 provides study materials, so we sign all of our incoming traders up for an STC study guide for both tests, so textbook, online classes, online practice tests. I wouldn't personally say that the tests are difficult, but that doesn't mean you have to study. It's a lot of rules and regulations and their exceptions and exemptions, so I usually recommend about 2 to 3 weeks of study for the SIE, and then about 3 to 4 weeks of study for the Series 57, so totally looking at like a month and a half to 2 months of real studying, though. You really got to put the work in. That's kind of my general recommendation there. And one of the biggest advantages, again, of trading prop is just capital access, which you can't get in the same way on the retail side. So on the retail side, just general margin is 4 times for day trading and 2 times for overnights, unless you're big enough to have portfolio margin. So portfolio margin for T3's retail accounts is, if the account is in excess of $500,000, we can apply for portfolio margin, which is 6.25 times. But on the prop side, we can generally give as much leverage as we want to traders. Usually we start by providing about 20x for intraday trading and 8x for overnight, somewhere in that range. It does depend a little bit on the specifics of the trader and the contribution. And again, these are all things that I could speak to anyone on an individual basis if they're interested in potentially joining the prop group. You're also going to get access to T3 and everything that we have to offer as far as education and development goes. Education and development is really how I have kind of built a really solid group of traders. I put a lot of work into the traders that I work with. We have a daily morning meeting at 9 a.m. We have a daily afternoon meeting at 4:15 p.m. There's an optional 1-month training program when you first get started. All of my traders that I work with get access to my VTF room, which is the pro desk room. So I'm able to share the morning and afternoon meeting each day via a screen share system. It shows all my personal positions in real time, what I'm long, short, and flat. I'm constantly communicating to all the traders in there, what I'm doing, what trades I'm getting in. And by the way, this is important. I don't think that anyone should ever blindly follow someone into a trade. Just because I'm getting into a trade doesn't necessarily mean that it's right for everyone. I'm happy to always share my ideas. I try to be an open book with my own trading with everybody that I work with as best as I possibly can. But you still have to make your own choice on, is this trade right for you? Maybe my game planning, my risk tolerance is probably different than yours. So you need to adjust any ideas to make them fit for you. So you get access to my VTF room. You also get access to Scott Redler's VTF room and Redler are all access. So, basically by putting all these things together, it's helped me to develop a really strong group of professional traders. I've got some guys who I've been working with who have been professionals for decades, former floor, former pit traders, and I've got others who are all the way down to the entry level who are just getting their career started for the first time. Buying power, again, this is what we were talking about. The biggest advantages of trading prop, first and foremost, is capital access because, it opens you up to a different potential style of trading. It can let you take advantage of those A-plus trades that we were talking about. And then secondarily to that is access to the community, access to education, access to the professional trading software, direct-to-market access, etc. Okay. Does anyone have any specific questions? Sure. So just reviewing here. So Interactive Brokers does not, actually I think it depends on which IB account you have. They have a more professional system as well that actually does not sell your order flow. They're one of the few other retail folks out there that don't do it. But then you have to pay, I'm pretty sure, a platform fee and a commission cost, and I think that T3 can actually provide better than that. So profit splits are also, deal specific, but very generally we usually start traders out because they're, posting capital with us at 90% in favor of the trader. Someone asked me about how this differs from T3 Guardian. So T3 Guardian is a separate program. It's like the T3 path to funding. So for professional proprietary traders, they typically have to deposit a capital contribution in order to work with the firm. And then again, typically what we'll do is we'll start by providing buying power at 20x approximately for intraday trading, 8 times for overnight at a very generous profit split. T3 Guardian is a separate system where you pay for access to a demo account, and then you have to meet certain metrics over, I think it's like a 3-month plus period of time. And if you meet those metrics, you can get a backed account with T3 Trading Group up to a certain amount of money. But again, we can have someone on the team, if you have any specific questions on it, reach out to you. Okay, so there's another question in here. How many rules do you create per trade? Swing trade, scalp, etc. So for me personally, I've been doing this for a while. I'm very typically managing anywhere between 15 to 25 positions at a time. I have many different types of trades that I'm taking at any time. I'm managing my swing trades, implementing day trading scalps, and even within that realm of swing trades and day trades, there's many different subsets of trades in there as well. I've got counter trend trades, I've got with trend trades, I've got momentum trades, I've got trades that I'm building into. So I do have different rules and different game plans for all of those different strategies. I don't think I can tell you, when I was new in the business, there is no way that I could have managed 15 to 25 positions at a time like I do now. As a matter of fact, when I was new, I had a rule, once again, because this business is all about making rules for yourself. The marketplace can be very random sometimes, and what we want to do is we want to try to take the randomness out of the market as much as possible by having rules that create consistency. So when I was a new trader, I actually had a rule for myself. I would not allow myself to be in more than 3 positions at any point in time. Because when I was new, I saw very quickly that I couldn't handle it. Once I was in more than 3 trades at a time, more than 3 positions at a time, I was losing track of my game planning and where I was supposed to be offered on this one and where my stop loss was supposed to be on this one, and my performance deteriorated as a result of it. As I gained experience, I was able to basically improve as a trader. Generally, it goes back to like we were talking about with the basketball analogy. I learned how to dribble, and now I don't know. Am I saying that now I play in the NBA? I don't want to overly toot my own horn because there's definitely traders out there who are better than I am. I'm definitely not even the best trader at T3, but I've definitely come up in ranks and kind of entered the big leagues a bit, and I can handle a lot more positions than I could when I was newer. But again, it's all about actually creating those rules. Next question. Is the NYC office open for traders? When will they reopen? So the New York City office, which is my home base, is not open. I actually personally both live and work in Manhattan at our headquarter office. At this point in time, the state of New York has yet to even provide us with guidance on when we can open. And I can definitely tell you that when we are officially allowed to open by the state, which we don't even know when that is exactly, we are not going to be in a rush to be the first to open. As I mentioned earlier, bringing everyone from being in the office to being remote has been very seamless. We have all of the normal infrastructure as far as meetings, information sharing, training. We've been able to get all of that in place on a remote basis. We don't probably feel a need to be rushing to open the office and potentially expose people between the virus. And look, I have been out of Manhattan, my home, for over 3 months. I live in the East Village. I'm watching on the internet this past weekend my neighborhood in flames. So it's a really crazy time. I don't know the exact answer to when we're going to be able to be reopened, and I'm honestly personally in a little bit of limbo myself because I don't exactly know when I'm going to be able to go home. So it's definitely crazy times, but all I need is an internet cable, and I can still keep doing my business, which is one of the beautiful things about trading is the freedom that it offers to you. So right now I'm in upstate New York. I'm in the Adirondack Mountains. It's beautiful up here. I've traded in cars. I've traded in the parking lot at a ski mountain before. So that's the freedom that this business definitely can offer to you, which is great. Do you have a West Coast office in Los Angeles? Unfortunately, we do not. All of our offices are really located on the East Coast at this time. We do have a lot of remote traders who are on the West Coast, but we have offices. We have 2 in New Jersey. I think we have 2 in New York City. We've got Atlanta, Georgia. We've got Boca Raton, Florida, but nothing in LA at this time. Do you recommend new traders focus on a basket of stocks so they become familiar with their movement? Yes and no at the same time is my answer to that question. I definitely go back to certain stocks that I know very well and that I'm comfortable with over and over and over again. But at the same time as I do that, you have to recognize, first of all, not every stock is in play every day. Some days, and this is one of the things you need to assess in your morning research. Like I have seen new traders. There's this phenomenon with new traders. I've seen it happen many times where they fall in love with a stock. Right, it's their first day trading. They make money in, let's just choose Caterpillar, and now next thing you know, they're trading Caterpillar every single day the rest of the month. And by the end of the month, they've given back all the profits that they made. So you got to be careful about overly falling in love with the stock. You got to trade it when there's actually an advantage there. Anything where there's opportunity, just yesterday, I think I traded, I already forget the symbol, maybe CETX, something like that. I never heard of it before. It was some $2 biotech stock. I got involved. Oh, no, it wasn't even a biotech. They did, I almost don't care, right, because the price action was there and I was able to make money. I think they do like some sort of video recording, so I don't know if that is 100% related to the riots that are going on or if it's more related to the temperature check thing that some of the other companies are focusing on, where they can have Basically video cameras tell if people have a fever. So that's more related to the virus. The point is, the technicals showed me I could make money. I got involved in the trade. It was actually one of my teammates in my VTF room got me involved in it. And I was able to make some money. So you got to be open-minded to potentially opening up to other trades or other types of names. Are the prop trading positions also remote? Yes, the answer is yes. Again, even before the virus, well in excess of 50% of our traders, I believe, were remote traders. Can you give an example of a specific trading strategy that you use? Well, again, there's very different types of trades, and I implement a lot. So when I give my training program, I usually start by providing just a few very basic trading setups for new traders who maybe don't know or have a whole ton of experience when they're getting started, for them to be able to focus on. So I talk about, buying off support, shorting off resistance, starting with very basic stuff, buying breakouts, shorting breakdowns. But I go over the very specific execution of those trades, how to execute. And that's what I've always felt that, from my own experience, I've seen a lot of trading education over the years. I've always thought that a lot of trading education is missing out on execution. And it's the most important part. The difference between, if you're buying a breakout and the resistance level is at $50, the difference between getting $50 as your entry point and $50.10 is potentially huge, right? And again, I'm not going to be able to get into all the specific execution details just, in this webinar today, but anybody who joins me, you get to participate in that. Hammer capitulation buy setup is another one. Utilizing inside bars as an execution strategy in areas of momentum and trend. That's another one. So these are all, basic, more early on setups that I start to teach to give traders a foundational approach for their trading in the beginning when they're first getting started. Does Lightspeed work with a Mac? Generally not. So for all the trading softwares, we really recommend having a Windows-based computer. I do know, and I am not a computer expert by any means. This is what we have a team for here. But I do know that there have been some people on Macs. There's a way to get like a program that puts Windows on top of the Mac, and that they have used that to use our trading softwares. So that could be something that you look into, but very generally we recommend a Windows-based computer. Do you have Florida offices? Yes, we have an office in Boca Raton. Our only green card holders or U.S. citizens can join T3. The rule is you have to have at least 1 year of work authorization. So green card is just fine. U.S. citizen is obviously fine. We work with some traders when they graduate universities who have an OPT, optional practical training. That's fine. So generally you need some sort of visa that lasts for at least 1 year, and my compliance team will okay you. Did you talk about capital contributions and the requirements and limits? So on the professional proprietary trading side of our business, a capital contribution, again, is required. For the most part, the amount that you want to come in with is up to you. The firm minimum that we are allowed to accept is $5,000, but we are generally looking to work with people a bit bigger than that. For reference, people will join the firm with contributions on the small end, $5,000 to $25,000, and others into the six or even low seven figures. It's not unusual, for someone to join T3 and provide us several $1 million because they want access to 10, 20 million in buying power or what have you. T3 is a very well capitalized proprietary trading firm, and we're very big, so we can handle really all levels of business. So at the end of the day, it's really up to the trader who is getting started with us. What platform do you use for graphing? I use Lightspeed. So the same software that I use to trade is the software that I use for everything. All of my charting, my level 2, my depth of market, routing, execution, baskets, filters. I use Lightspeed for all of it. Okay, cool. I think I went through the main questions here that people have posted. Again, so these webinars are designed to provide people with information about, joining T3, either on the professional proprietary trading side or the retail trading side of our businesses. So if you have any specific questions, here's my email address, or you can provide us your contact information, and either myself directly or a member of my team will get back to you, and we will provide you with information. I see one other question snuck in here. How long is training before going live? Great question. So typically after someone passes the Series 57 exam, we start by providing them a simulator account before we switch them to a live account. And we'll have them on the sim anywhere from like 1 week to a maximum of 3 weeks. Really don't want to keep anybody on a demo account for longer than that, because we've found that you actually start to develop bad habits if you're on the demo for too long. So typically, we'll have you on the demo account for that period of time, and while you're on the demo account, you're undergoing the training and the meetings, everything that I discussed, but it continues into going live, and then really continues in some ways throughout the entirety of your career. I mean, I don't really have anyone who is like directly teaching me trading anymore, because I've been in the business for a while, but it doesn't mean I'm not learning. I'm constantly learning from myself, from the best. I got to tell you, one of the most satisfying feelings is when I bring in a trader and I train them, and they get good enough that they eventually start teaching me something. They get good enough that they're providing me a trading setup that makes me money. That is one of the most satisfying things about the work that I put into new traders. So anyway, training starts when you're on the demo account and continues into when you go live to various degrees. Okay, guys. So appreciate everybody coming into the webinar. The main focus, the main takeaway that I want people to learn from this to implement to their own trading is that concept of risk skew. I really think that is the biggest thing that you can implement at a certain level of experience to start making big money from trading. It's how you learn to make the most of your A-plus setups. It's how you learn to be able to have the big up days when you combine an A-plus setup with rules and good game planning rules for reward maximization. So when you can put up some really big trades and some really big trading days. And a lot of times, those few days are the days that make your entire month. And then some of those months become the month that makes your year. So appreciate everybody's time today. And let's get back to markets, right? Good luck, trade smart. And like I tell my traders, above all, manage your risk.